One company holds 762,000 Bitcoin, 3.6% of every Bitcoin that will ever exist. Their stack is underwater. Their stock is down 60%, and their chairman just announced a $42 billion plan to buy even more. This is either the greatest trade ever made or the greatest financial disaster in slow motion. Strategy, formerly MicroStrategy, doesn't really sell software anymore. It exists to buy Bitcoin. That's the entire business model. Here's how the machine works. Strategy sells shares of its own stock and preferred shares into the open market. It takes that cash and buys Bitcoin. As long as the stock trades at a premium to the Bitcoin on its balance sheet, it can keep issuing new shares and buying more, creating a self-reinforcing loop. Sell shares high, buy Bitcoin at market price. The gap is the edge. Michael Saylor calls this digital capital. Wall Street calls it the most aggressive leveraged Bitcoin bet in history. The company has raised over $54 billion doing this. It now holds 762,000 Bitcoin at an average cost of roughly $76,000 per coin, and it's not stopping. This week, Strategy filed for a brand new $42 billion capital raise, $21 billion in common stock, and $21 billion in preferred shares. The target? 1 million Bitcoin by year-end. Here's where it gets uncomfortable. Bitcoin is trading around 67,000. Strategy's average cost basis is 76,000. The entire position is underwater, and the company just reported a $17.4 billion operating loss and a $12.6 billion net loss in Q4, almost entirely from marking its Bitcoin holdings to market. Since Saylor started buying in 2020, he's diluted shareholders by 313%. The share count went from 76 million to over 314 million. No other large-cap US company has come close to that level of dilution in the same period. And here's the detail that should make you pause. While Strategy, the company, keeps buying Bitcoin, Saylor personally has been selling shares. Corporate conviction going one direction, executive profit-taking going the other. The market has noticed. The stock is down 60% year over year. But Saylor's response to all of this is simple. Zoom out. He says Bitcoin will double or triple the S&P 500 over the next 4 to 8 years. If that's true, then buying at 76,000 is irrelevant because you're selling at 200,000 or higher. The temporary drawdown is noise. The long-term compounding is the signal. The balance sheet has no credit risk. All 762,000 Bitcoin are unencumbered, meaning they're not pledged as collateral. Strategy has 50 years worth of dividend coverage and 2.5 years of cash on hand, just for preferred share payments. There's no forced liquidation trigger. And the new preferred shares, STRC and STRK, pay 11.5% yields, making them some of the most actively traded credit instruments in the market. Saylor has essentially invented a new asset class, Bitcoin-backed yield products, and institutional demand is massive. So what's the chaos capital take? Strategy is not a stock. It's a leveraged Bitcoin position wrapped in a public company. If you're bullish on Bitcoin long-term, MSTR gives you amplified exposure, both up and down. If Bitcoin recovers above 76,000, Strategy looks like genius. If it doesn't, 300% dilution on an underwater position looks catastrophic. The honest answer, this is a conviction trade. You either believe Saylor's thesis or you don't. There is no moderate position on MSTR. Size it like what it is, a high volatility, leveraged, single asset bet. Michael Saylor is trying to accumulate 1 million Bitcoin. Nobody in history has ever attempted anything like this. Whether it ends in legend or liquidation, you're watching it happen in real time. The capital markets are chaos. Embrace it, and I'll see you in the next video.